Hey guys, Tom here. Just before we get into this video, something I forgot to film when I was putting this together was just a bit of a disclaimer. This is obviously my opinion. I'm not a qualified financial advisor, and I'm certainly not your financial advisor, even if I was. So take my review with a grain of salt. This is just my opinion. If you've got varying opinions, definitely seek outside financial advice before you make any investment decisions. But with that said, let's get into the video, and I really hope you enjoy this one. Cheers. Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video or if you're new here, be sure to hit like and subscribe on this video. It does genuinely help me out a lot. So one of the requests I've been getting a lot lately, especially since I did a video a while back on sort of an overview of the NZX stock exchange, is to do some videos on individual companies within New Zealand. And I thought a good place to start would be a business called the A2 Milk Company. And I'm going to put a quick stock chart up here for the A2 Milk Company. They've been a phenomenal performer in the New Zealand stock market for a number of years now. And they now make up about 5 or 6% of the total market cap of all of New Zealand stocks. So if you have any sort of exposure to the New Zealand Top 50 index or anything like that, A2 Milk is actually going to make up a fairly sizable percentage of that index, of that investment for you. It's almost a little bit comparable to how Apple fits into something like the S&P 500 index. It makes up quite a big percentage of it because it's the largest by market cap. We have a similar sort of situation with A2 Milk and the New Zealand Top 50 over here in New Zealand. And it is a company that's listed on both the NZX and the ASX. So if you happen to be an Australian investor watching this, it's a company that's relatively easy for you to get invested in if you choose to as well. So I've got quite a few points that I want to get through, and I also don't want this video to be half an hour long, so I'm going to get through each of them relatively quickly. We're going to do basically a 4M analysis on it, meaning moat, management, margin of safety. That's sort of the Philtown Rule 1 style investor checklist. So we'll walk through that, and I'll touch on quite a few points. As I say, this video could be quite long if I don't get through each of those points reasonably quickly. So if you do have any questions or want some further explanation on any of these, feel free to drop a comment down below and I'll be more than happy to respond to you there. So let's get into it. First M on our 4M checklist is meaning. Basically, am I capable of understanding the business? And is it a company that I would want to be an owner of? So in terms of understanding the A2 Milk business, we'll get into a lot of the science behind what A2 Milk does a little bit later on, but essentially they are a producer of milk. They sell a certain type of milk and products associated with that milk, like infant formula and that sort of thing, out into the market. And there's not really any other business in the country that probably falls squarely in the center of my circle of competence more than A2 Milk. So I have a background in dairy farming. I grew up on a dairy farm. I have a Bachelor of Agricultural Science. That's what I studied at university, and I work every day in basically the dairy and sheep and beef industries in New Zealand. So in terms of understanding the business and having it fit into a circle of competence, there's not many better examples for me personally than the A2 Milk Company. That may not be true for yourself. Possibly it is true for yourself. To be perfectly honest, I don't see A2 Milk as a massively complicated business. So even if you don't have a background in agriculture, possibly this is something that could squeeze into your circle of competence as well. But if it is approaching the edge, possibly it's one to steer clear of. Something that Peter Lynch talks about in his book, One Up on Wall Street, is that you very rarely see doctors investing in medical supply and drug companies, which seems very strange, but you always see workers from McDonald's getting hot stock tips about pharmaceutical companies. So it's a little bit backwards, I would say. If this is in your circle of competence, definitely it might be a business to look into further. If it's not within your circle of competence, possibly it's one to steer clear on. But if you're capable of understanding and think that if you can do some research, it's going to fit in for you as well, definitely give it the green light. So for me personally, it gets a tick for meaning. So let's move on to moat. So the second M for the A2 Milk Company is something called the moat. Does the A2 Milk Company have some sort of competitive advantage, something that keeps competition away from the A2 Milk business? So I think first we need to understand what A2 Milk actually is, and then we can dive into a little bit further around how the A2 Milk Company can outcompete other businesses that are in a similar space. So when we look at the New Zealand landscape, dairy products is by far and away the largest type of product that New Zealand exports. We are an exporting country, and dairy is by far and away the most prominent product in our sort of export range. So there's a few different milk sort of companies in New Zealand. The main ones are Fonterra. They currently collect around 80% of New Zealand dairy farmers' milk supply. That used to be more like 98%, almost all of it, but there's been some competitors come in recently. So that's about 80%. We then have the likes of Synlait, which actually link in with A2 Milk. So A2 Milk have about a 12% shareholding in Synlait. And then we have some minor players like Tatua, Open Country Dairy, and some other more minor companies as well. But really the main ones that we want to focus on today are Fonterra and Synlait. So from a dairy farmer's perspective, Synlait, which ties into A2 Milk, they're the supplier of milk to the A2 Milk Company, and the A2 Milk Company has a shareholding in Synlait. They actually have some competitive advantages in my mind in terms of obtaining milk supply from dairy farmers here in New Zealand. And there's a couple of things that come along with that. So for the last couple of years, Fonterra has been, or for the last year at least, Fonterra has been burning money. They have been losing a lot of money, and they have a cooperative model. So in terms of being able to supply milk to Fonterra and get paid to supply your milk as a dairy farmer, you actually have to be a shareholder in Fonterra. And when you're a shareholder in Fonterra and Fonterra happens to be losing money, that is not a good thing for your investment. So there's been a lot of people having their share price drop down as shareholders of Fonterra. Obviously, as a dairy farmer, you're not all that happy with that. And it's also a lot of capital to have sort of tied up in a business that is not going to be producing very high returns for you. You're essentially just investing in it so that you can supply that company. And Synlait has a competitive advantage, in my mind at least, in that aspect. So to supply Synlait, they have a competitive milk price, so you're not going to be getting paid a dramatically different amount supplying Fonterra versus supplying Synlait as a dairy farmer, and you actually don't have to be a shareholder in Synlait to supply milk to that company either. So potentially there's a lot of incentive to shift from Fonterra to Synlait, and I think that's something that we've seen over the last few years with Fonterra's market share slipping. And in my mind, that's just going to continue, to be honest. There's a lot of incentive for dairy farmers to switch across. They can take that capital that they've got currently in shares in Fonterra, do something else with it, improve the production of their dairy farm, buy extra land, buy rental property, do whatever else they want to do with it that is potentially going to make a better return than just holding stock in Fonterra. And they're not going to suffer a whole lot of consequences by supplying another milk company. So that's moat in terms of getting milk supply. Moat in terms of the actual products of A2 Milk. This one in my mind is pretty sketchy, and this is the part of the video that I want to spend probably the most time on out of any of these sections. So essentially A2 Milk, the company owns the trademark for A2 Milk, and they license a few of the genetic tests that test cows to see whether they actually produce A2 milk. And if you don't know what A2 milk is, essentially the typical milk from a cow has a mix of both A1 and A2 beta-casein proteins. A2 milk, or A2 producing cows, have only the A2 beta-casein protein in the milk that they produce. And there's supposedly, and I say supposedly because I am quite skeptical about this, and I'll link some research actually in the description below, but supposedly there's some negative health consequences to the A1 beta-casein protein. Supposedly it is linked with a higher incidence of heart disease, higher incidence of diabetes, issues with infant death, and even issues with autism are all things that we've heard about A1 beta-casein protein. In terms of the actual science, it's very sketchy, in my mind at least, and whether or not there's actually a competitive advantage to marketing A2 milk versus A1 milk, I don't think we can doubt that at all. I think consumers of milk are not scientists, and I think there's a lot of comparisons to be had here with things like organic products. If I was around and working in the industry when organics was on the rise, I probably would have said the same thing, that organics are not going to be around for a long time, but years and years later they're still here. In my mind at least, there's virtually no benefits to consuming organic food versus conventionally produced food, especially in the red meat and in the dairy sector. There's some arguments to be had around chicken production and that sort of thing because the actual environment of those animals is so different. But in an organic dairy farm or in an organic sheep and beef farm, the farms are managed exactly the same. They're still producing this. They're still consuming the same types of feed. Still consuming predominantly pasture here in New Zealand, ryegrass, white clovers, that sort of thing. They are still the exact same genetics. The only difference is they don't use chemicals, they don't use fertilizers. You're getting the same product at the end of the day, in my mind. So if you're paying up for organic products, especially on the dairy side or in the red meat production side, you're throwing money away in my books, but that's just my opinion. As I say, it could be different for other production systems. So in terms of the actual health benefits of A2 milk, I think there's a lot to still be worked on there. There's a lot of evidence still to come forward. If evidence does come out, I'll be more than happy to change my mind, and I think that'd be a fantastic thing for the A2 Milk company. But it certainly worked well for A2 Milk so far from a marketing perspective and being able to sell a lot of product. So I've got a couple of extra points actually around moat, and I wanted to talk a little bit more about some of the genetics of cows that produce A2 milk. So like I said earlier on, A2 Milk, the company, licenses some genetic tests to test cows for whether they actually produce A2 milk. And A2 milk is simply a genetic characteristic of the cow. So if they have the genetics to produce A2 milk, just like someone might have genetics for blonde hair, then they will grow blonde hair and they will produce A2 milk. So it's not much more complicated than that. If you've got the genetics to produce A2 milk, you can do it. If you're a dairy farmer in New Zealand at the moment, probably your herd is producing a mix again of A1 and A2 milk, and there's going to be a transition period if you want to be an A2 milk supplier. So that's probably going to take about 5 years. The average dairy farmer replaces about 20% or so of their herd every single year in New Zealand. So 20% times 5, 100%, that's the whole herd. That's sort of the period of time it's going to take to transition across to being an A2 producing herd. And if the A2 milk company does ever pay suppliers, big premiums for producing A2 milk and that sort of thing, that's going to be sort of the process to work across to being an A2 milk supplier. And there's nothing to stop other companies supplying milk to consumers that have the A2 protein in it. The A2 milk company owns the A2 milk trademark, but there's already other products on the market under different brands that will say things like naturally contains A2 protein or naturally A1 protein free, those sorts of things. So it's definitely a thin moat, a narrow moat. If it gets deeper over time, that will be fantastic for A2 investors, but it's one to keep an eye on. So anyway, that's some just quick extras on the moat, so let's get through to management. So management for A2 Milk, again, is a bit of an interesting one. They have a new CEO. They have a CEO that has been with the company for about a year. I'm not going to attempt to pronounce her name. Apologies for that if you happen to ever come across this video for some reason. But essentially, she came across from Qantas, from the Australian airline, and with Jetstar specifically. So that's basically a budget airline available to Australian and New Zealanders, as far as I know. I don't think it's in any other countries, but basically she came from Jetstar. So in terms of performance, there's really a lot still to be seen. We can look at what previous management has done. Basically, A2 Milk has little to no long-term debt. They have an extremely high return on equity, which I'm just going to have a look at. They have a almost 50% return on equity over the last 12 months. But there's also some negatives with this new management. So about 3 months into the job, the current CEO of A2 Milk sold around 4.3 million New Zealand dollars worth of A2 Milk shares, which I believe is all of her holding at that time. So supposedly that was something that had to do, that was a prior commitment to already coming across to the role, but it's a red flag nonetheless. So that's something to keep an eye out for. In terms of the actual performance of the management, ROE is high, debt is low, They have cash on their books, so in financial terms, they're in a strong position. But in terms of the ethics of the management and how much they genuinely believe in this company, there's a lot to be seen in my eyes. So that's a very quick run through management. I'm conscious of time here, so I'm going to get on to margin of safety and talking about valuation for A2 Milk, and then we'll call it a day, and I'll give you my final thoughts on the company as a whole. So if you haven't already seen my videos on valuation, I'm going to put a card up in the top corner, which is either that corner or that corner, one of them. I should be seeing that now, hopefully, so that you can click to see how I sort of calculate the value of different businesses. But I'm also going to put in some screen recording of my computer here. So hopefully I'm nicely up in the corner somewhere and you're seeing my computer screen running through a valuation for A2 Milk. And it's a bit of a tricky one, actually. So A2 Milk has had some stellar growth rates over the last few years. And again, just looking at my notes, the 5-year average growth rate is 71% per year. And that is enormous, and that is also not sustainable. So if you're running a valuation on A2 Milk Company, please do not assume that they're going to continue to grow at 70% per year. That is just not going to happen. The current analysts have them at around 21% a year. As always, I like to be a little bit conservative. So looking forward, say 5 years, I'm going to assume that they can do, let's say, about 18 or 19% a year. So I'm going to plug that into my valuation. That gives me a PE multiple. Again, if you've watched my valuation video, I tend to use a PE multiple of around double the growth rate as a good sort of starting point. So if I use an 18 or 19% growth rate, I'm going to use a 36 to 38 PE ratio. I'm then going to work backwards at a minimum acceptable rate of return or a discount rate of 15%. And that will give you a value that you're hopefully seeing on the screen now. And I don't have those numbers in front of me, but from memory, that is right around the market price of A2 Milk at the moment, right around $14. So if I've said that wrong, you'll see the value on the screen. You'll be looking at it at the moment. But essentially, the market price is basically what I've calculated the value at for A2 Milk. So this is not uncommon to see with a very, very closely followed company. They're not often going to be mispriced, and from my perspective, they are currently priced basically at their value. So in terms of making an investment, I'm a value investor. I want a margin of safety. I want a big one, especially when we've seen a few little issues come up around moat and potentially with management, like we've talked about in the video already. So I'm not going to be a buyer of A2 Milk today. I may come to regret that in 5 or 10 years' time looking back at this video because they are growing so well. But I may come back and watch this video and A2 Milk may be down 50 or 60 or 80% because their moat has been breached by some other company or some more solid science has got out to the market around the benefits of A2 Milk versus some of the harmful effects or so-called harmful effects of A1 Milk. So time will tell. Currently, I'm not a buyer of A2 Milk. If we did get a big sort of 50% margin of safety or something like that, I probably would make it a 10 to 15 or % sort of position in my portfolio because it is so sort of deeply entrenched in my circle of competence, and they've got a great track record of growth, and they're a great marketing company. Even with the science stuff that I've brought up, they're a great marketing company and they've done very well. So that's my thoughts on valuation, and that's my thoughts on the A2 Milk Company overall. I really hope you enjoyed this video, and if you do like these sort of stock analysis type videos, definitely let me know. Drop a comment below. If you've got some other companies, particularly in New Zealand, I think it would be quite cool to have a look at some other companies. So if you do have any thoughts on that, drop them in the comments below. As I say, like and subscribe, and I'll see you in the next one. Cheers.